Welcome to our weekly roundup of key business developments in Sri Lanka. I'm Nishani Pigara. Let's first take a look at the main stories for this week. Sri Lankan economy grows for the second consecutive quarter. $100 million ADB loan for SMEs. Tourist arrivals surge past 500,000. In this week's top story, the Sri Lankan economy grew 4.5% during the fourth quarter of 2023, expanding for the second consecutive quarter. However, for the full year 2023, the economy contracted 2.3%. All sectors expanded, with the industrial sector recording a 7.9% increase. Growth was driven by exchange rate stability, easing interest rates, and a turnaround in manufacturing activities. However, ICT, real estate, financial services, and telecommunication sectors contracted during the whole year. The president expects to achieve a GDP growth rate of 3% in 2024, beating World Bank's estimation of 1.7%. The Asian Development Bank approved a $100 million loan for small and medium enterprises, enabling them to access finances to stay resilient against external shocks. According to Manohari Gunawardena, a senior financial analyst at ADB, SMEs contribute to 52% of the country's economy and employs 45% of the population. Through the loan, ADB will open a $50 million credit line for underfinanced industries, including exports and tourism. In a bid to modernize the Sapugaskanda fuel refinery, the government plans to make the refinery a separate entity from the Ceylon Petroleum Corporation. This decision comes as the government aims to find a strategic investor to modernize the refinery, which is in critical need of a facelift to ensure smooth operations for the next 25 years. The refinery caters to around 25% of domestic demand for petroleum products. Meanwhile, according to Kanchana Wijesekara, Minister of Power and Energy, Sri Lanka decided to explore the option of relocating Ceylon Petroleum Corporation's oil refinery to Trincomalee, adding that the move is considered in the light of the development of a tank farm in the region. Sri Lanka continues to benefit from the unrest in the Red Sea shipping lanes as the Port of Colombo saw a 29% increase in transshipment volumes in February from a year earlier, rising for a third consecutive month. With shippers deciding to reroute their vessels around the Cape of Good Hope to avoid disruptions to shipments, the Colombo port has emerged as a major transit point. Transshipment volumes accounted for a substantial 81% of the total throughput. Sri Lanka's private credit contracted by 52 billion rupees in January 2024 from a 97 billion rupee surge a month earlier. Credit contracted from reduced demand for import credit and reduced private consumption as the economy felt the VAT hike. Meanwhile, the central bank expects an acceleration in credit demand during the current quarter of 2024 from improving macro indicators. In our weekly tourism update, during the first 17 days of March, over 111,000 tourists arrived in the country. However, daily arrivals fell to 6,546 from the 7,600 recorded in February. Since the beginning of 2024, the number of arrivals have reached over 537,000, raising optimism of meeting the government's target of 2.3 million visitors by the end of the year. India was the primary source market, followed by Russia and Germany. Now let's take a look at the weekly movement of the All Share Price Index and the S&P SL20 Index at the Colombo Stock Exchange. At the Treasury bill auction held on Wednesday, yields on all maturities marginally increased for the fourth consecutive week. Bids amounting to 238 billion rupees were received, of which 140 billion rupees were accepted. The Sri Lankan rupee continued to appreciate against the dollar this week, with the central bank's indicative mid-spot rate ranging around 303 to 307 rupees. The buying rate at several commercial banks fell below 300 rupees for the first time since July last year. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.